What's up, guys? Today I'm going to show y'all when I don't trade, pretty much. Why I don't trade, when I don't trade, reasons behind, whatever. So, we got, these are the three things: ranging, high time frame, or low time frame. Should be a quick video. Alright, high time frame. All we see, we're ranging right here, right? Up, down, up, down, up, down. It's the high time frame. We're not delivering higher, we're not delivering lower. You can see once we finally break out of this range, though, we start displacing lower and we take out the drawn liquidities below. So until we get a break out of the range, it's usually on the 5 minute because we're normally ranging on like a 5 or a 15. For example, like let's say this was a market open right here. I would not trade until, let's say it's pre-market. I would not trade until pre-market breaks above or below this higher low because, well, it's not going to deliver unless it does. Same thing like down here. Not crazy range, but still right here. I'm not trading until we actually show. Once we show, look, displacement to the downside, take your entry, clean displacement to all these lows right here. Pretty much, we don't want to be ranging on any of the time frames. If we're ranging, let's say, looking to take an entry on the 1 minute retracement displacement and it's ranging, I will scale up to the 5 minute. And if that's ranging, I'll scale up to the 15 minute. And I'll just keep scaling up until I find the time frame that's the cleanest. That's where I'll look to take my entry. Next, we got gaps and wicks. All right, so gaps, we'll go back to this day. Right here, we're sitting inside this gap as we speak right now, and we also have this daily gap below us. I won't trade this day because unless we show displacement through the gaps, I'm not going to trade. There's no point. It's literally just kind of range inside the gaps. There's no real moves for me to happen or for price to make. So I literally just stay out unless we get like this day. I would have needed to see some nice displacement up this way, and then I would have maybe taken longs to the high. But we normally want it to get inverse first. Same thing with like the low time frame for bouncing in between gaps. No reason to trade. You know how it's just stupid. You normally want to wait for them to get inversed, which would look like this. So this is an inverse right here. Didn't end up playing out, but let's just say that's an inverse. We closed below the gap. That's an inverse, means it's invalidating the gap. But yeah, it's mainly like high time frame. Like this was a daily, 2 daily fair value gaps. I did not want to trade. This one got inverse, so let's say we didn't have this other one up here, I would have been perfectly fine with trading longs that day. But because we were bouncing in between them, like literally the next day, we can see we tapped the morning after. We ended up tapping this gap, and we just sat around here all day, which is not something I want to trade. Next thing is wicks. We'll go with the wicks. So when you're trending, right? Let's say we're trending lower. We just hit a low down here. Let's just say it's a low right here. And all of a sudden, we just start wicking, right? Hit the low, wick up. Hit the low again, wick up. Hit the low again, wick up. Hit the low again, wick up. There's no point for me to trade that, right? It's showing rejection of the low, which is something that I want to see, but goes back to us ranging, right? Most likely when we wick the low and we just reject it, we're just going to chop around for the rest of the day. I had a good example of this the other day, right? Here. My draw on liquidity was this low. Took my entry up here, stop loss, going over the trade multiple times. You can see as soon as we hit the low, we literally just start ranging and ranging and ranging. We don't do anything. It's just improbable. Now for wicks, wicks kind of tell the story, I think, right? No, wicks do the damage. So if we see, look at these wicks. This is just clearly showing me price does not want to go higher at the moment. And you can see we dump down, might have made an SMT with the slow, and then we start pumping. But it's really just wick showing you what price wants to do, right? Look at this wick. You see this close, there's no way you're telling me that you want to go long after this, right? We're wicking the fair value gap. And this isn't really like a not trade. It's just like if we're wicking an area, let's say I wanted to go long here and we just keep on wicking this fair value gap, I'm not going to trade. I'm just literally going to hop off the charts. But look at these wicks. That's a crazy wick. Even these wicks down here, you don't want to see them. I want to see full candle closures and displacement. This doesn't really show like that. That's a great candle right there. Exactly what I want to see. I don't want to see this wick and then us go higher. I want to see a wick and then go lower because it's showing us we're rejecting up here. It's pretty much it for wicks high time frame. Talking about it last video for my draw on liquidity. Wicks will kind of tell you about, here we go, protected low right here. If we truly are bullish, we're not going to come down and take out this low again. I just know from collecting data. I've seen it get rejected multiple times. We'll come down, edge it, and then we'll go higher. Just wouldn't make sense in this uptrend. Make higher highs, higher lows. So why would we want to make a lower high here or a lower low here? You know what I'm saying? So if we truly are bullish, I wouldn't want to take a trade to that. We're also in a gap. A lot of the times you see a lower high and a gap, and it's just like a wick like that. It's not going to get hit or you're going to get edged. But I mean, like if you collect your own data on it and it's working, go for it. But I've seen it happen multiple times where we'll come down, edge the lower the high, and then go the opposite direction. Oh, I just cleared. Damn. I feel like I had one more. Right. Fuck me. Wicks and gaps, we did that. There was literally one more, bro. And now I forget it. So I won't trade when price is ranging. Won't trade in between gaps. Won't trade towards a wick like this. The last was drawn liquidity. Kind of goes along with this, right? If this is my only drawn liquidity for the day, I'm just simply not going to take a trade. I don't want to wait for price to do something and then say, okay, maybe we're going here. No, I like to have a plan in the morning. So, for example, let's just go to a day. A day with 0 drawn liquidity. This is a market open right here. Here we go. This isn't terrible. All right. So right here, I mean, I guess you can call this right there a drawn liquidity. So we'll scratch that. But it's pretty much just days where we don't really have a drawn liquidity. I'm trying to find a good example though to like show you what that looks like. But we're either, damn, we're moving. So we took out that high, took out the low. Now we're just ranging right here. Blah 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 blah. We're just doing whatever, right? This doesn't really show me we want to go anywhere. It's not bullish. It's not bearish. It's chopping. Same thing. Ranging. We don't want to trade. But let's just say we're very far away from this low, very far away from this high. I just simply won't take anything. There's no point. It's too far away. I like to take it when we're actually trending towards it and we're actually moving. I'm trying to find, like, there's no good days. Well, there definitely is, but I guess this isn't terrible. So this is as market is opening, right? We're sitting inside this gap. We're not really bearish. I mean, I guess we are a little bit. Just took out this low. Definitely don't want to target higher because this gap is blocking us. Only thing we really have is this, which is 1,500 ticks away or 370 points. So this is a day where I really would not look to take anything. Low time frame, 1 hour, not really any draws up here. If I'm taking a trade to the upside, we're trading into a gap. If I'm taking a trade to the downside, I'm trading into a 1 hour gap and a low that is very, very far away. So that's just like, hold up. That's pretty much just the no draw on liquidity days. You'll see it as you're trading, but it's really when we're too far away from a draw or we literally just have nothing in existence for us to trade to. basically just stay away from those days. You're gonna get caught up in some bullshit that you don't want to take, that you got forced into taking because you broke your rules. So I would just say stay away from those days. Stay away from the days where trading in a gap, like I said the other day. Damn, we gotta find it. Like when we're trading in this gap or in between two gaps, I don't really want to take anything. Could go either direction. I don't want to predict. Range. This is another range right here. And see, we're literally just chopping around. We're not moving. We're not doing anything. We want to stay out of that because it's going to be no movement, right? You need the high time frame to be clear and actually moving in order to take a trade. So hopefully that helped y'all. I appreciate y'all watching. Peace.